How about if it's Christmas in the middle of August and all of a sudden you got everything you wanted? Let's say you got QE, which I think is quantitative Europe, all right? And then on top of that, you've got low interest rates. And so all of a sudden, this should be good for the housing market. And you saw oil didn't go up in value. And you go, well, that's going to put more money in the consumer's pocket. And you've had a couple of days of an S&P at 2,000. You go, gosh, I got everything I wanted. Could the market really kind of go from 2,000 and actually not do what it did at 1,000, which is go up and back and up and back? I mean, if you had an S&P 1,000 shirt and you washed it every night, you wore it out. I mean, you couldn't wear it in public anymore. And now all of a sudden, everything is lining up. I mean, Stephanie doesn't believe I can actually be this guardedly enthusiastic and optimistic about where things are headed. But, you know, money's going to be cheap, and the only thing that
is this a new Nathan Bachrach?
This is going to be the new me. I mean, you know, we're always going to have
Better
a little
late
bit.
than never, Nathan. Better late than never.
Well, you know, I've got some survey data. We survey 1,000 people, and I can tell you some things going on out in the world that I'm a little cautious
Not
about.
Not always perfect by any means.
No, it's not always perfect.
It's a wall of worry, which is why we keep on rising.
But everything's lining up really nicely to continue to sustain a solid growth forward. That's the trick.